FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And let's jump right into the charts here. We're taking a look at pound JPY. We're taking a look at it because there was an opportunity yesterday where a trade was taken and it was a loss. And so I want to make sure that we cover not only the good stuff, right? You all want to see the wins and all that good stuff, but we learn more about the losses than we do the wins. All right, so let's take a look at this particular trade setup on pound JPY. Again, one of the pairs that we're following, and let's see what went wrong, or was there anything that was wrong and it was just a bad trade. We're coming off a peak formation high. All right, so obviously because we're coming off peak formation high, we're looking for sells essentially. Now on the 15-minute time frame, this was yesterday. And what we're looking at essentially is during the London session, there was an opportunity for what I thought was a type 3 setup. And so let's take a look at that. Now, before we get into these specific setups that I wanted to cover today, I picked these two setups out from our FXN Plus London trade setup alerts that I give out for our FXN Plus members. This one, the pound JPY, was sent out at 4:43, and then the pound USD was sent super early, like 2:45 in the morning. So these are the two examples, and these are the two trades that I specifically watched and took. So I just wanted to make sure that you guys understood where these are coming from. So the opportunity itself was right here. So you can see we clearly have price coming out of the Asian session, going down to the bottom, getting rejected, and going right back up to the middle of the range. All right. Now, once we get up here, you can see we start to get rejection from the middle of the range, and then we're also bouncing off the 50 EMA. This to me right here is the point where I'm like, all right, this is a good trade setup. We're going with the directional bias. We have pretty much everything that we're looking for. All right. We get the star pattern here, which is these three candles, and then essentially all we're doing is waiting for a pullback on the next candle. There is the next candle, and of course the setup is a good setup, right? You get a pullback, and then you could go ahead and put your stop loss right above this specific candle, because you don't need to go. Theoretically, my way of thinking is I don't need to go all the way up here for stop loss because this wick has already basically grabbed all of the orders. If I'm wrong, I keep saying the same thing, but if I'm wrong, I would just rather be wrong right away, get out of the trade, and move on to something else. The trade setup was essentially like this here. All we're trying to do is basically go back to the very bottom of the Asian range. That gives us way more than 2-to-1 risk reward ratio, which is fine, which is what I was looking for. As you can see this start to play out here, we ended up just consolidating, and then eventually just got taken out. On the fifth candle, we got taken out. Okay, so that was a loss. So you gotta ask yourself, and this is something that I asked myself as well, is did I do anything wrong? Was there something wrong that I missed that could have prevented me from getting into the trade? Now, for me specifically, for type 3 setups, which is probably the majority of my trades, I'm looking for, obviously going with the directional bias. I'm looking for a very easy, simple to see pattern, which this one clearly gave, pinning to the middle of the range, pinning to the 50, a big wick on the middle candle. So all the factors that I look for on my trading plan were there. Okay, so there is nothing wrong that I did on this trade. I followed my trading plan that I've tested and I have thousands of trades on for this setup, and this one was just wrong. Okay, now for me the important factor is this. Here's some things that some of you may not look at after a loss, okay, is the fact that if I take this loss, all right, and I'm going, price, I'm still looking for sells no matter what is price going towards, essentially? why did price decide to go back up? Okay, and so the closest thing that I can see in this particular scenario is the fact that we have this area up here, and we also have this area a little bit higher. So these two areas are areas where there are going to be orders. Okay, anytime that you see any kind of pullbacks or reversals, those areas all have orders in them. There's orders all over the place. Now, the question that I ask myself is, okay, if I took the loss, is price going back up here to grab more orders, essentially? Because the bias, to me, hasn't changed, okay? For me, in order for the bias to change, we would need to essentially make a major move higher, and in this particular case, it would have needed to go above 189,500, or essentially the Asian high, or basically break above the 200 EMA. For me, as long as if we go back up, okay, to grab some of these orders, and we still present an opportunity for us to go short, then I'm okay with retaking the order. As this plays out here, okay, I want you to notice what happens. I want you to notice this candle. Why is this candle important? Well, because what I literally just said was if the market wants to grab more orders, it's going to go to these two areas. It's the closest two areas that it has in order to grab orders. Once I saw this, I'm like, okay, well, maybe what we're going to probably end up getting is a continuation trade, some form of a continuation trade to continue to move down. Okay, we did have a move. We did have essentially a move, that started in Asia, went all the way to the London session. Then we basically just retraced. Okay, at the end of the day, right, all we did was we went and did this. Okay, and then back down again. That's my way of thinking about it. Okay, now once I saw this candle, I started to pay attention to it more, because now if this area is now respected because we got orders that were taken out in this area, then there's another possibility for another entry as a continuation trade. And so once we got this candle to print, this candle here was not enough for me specifically to think about getting into a trade setup. This candle, though, was, for the simple reason that now, first thing, we closed below the 13 EMA. Secondly, most important, is that we closed below all of this right here, all of this consolidation, right? Remember what I said in the previous video: consolidation or accumulation followed by manipulation and then distribution, right? So this right here is accumulation that happened. Right here is manipulation, and then the distribution starts, right? Knowing that factor, the next candle produced a pullback. That pullback is the entry. Okay, now again, the same scenario for me is I'm putting my stop loss above this candle, because if I'm wrong, again, I want to be wrong right away, and I'm not trying to do something like this. To me, that just does not make any sense whatsoever. Okay, so the stop loss goes right above that candle. Okay, and then again, we're just aiming for the same thing, just the bottom of the range, somewhere we've already been to. This first trade was about 13 pip loss. This trade, though, was a 55 pip win. Very important to understand that even when you have losses, okay, even when you have losses, as long as you understand what is happening and why it's happening, you can still find opportunities on the same pair. But the important factors are that you need to understand what's happening and why price action is doing, and start to question, okay, if I followed all of my rules for this particular setup, and I followed my plan, and my plan failed, and it ended up in a losing trade, okay, that's perfectly fine. But why did it fail? In this case, it failed because market was trying to grab more orders, and I was able to identify where these orders are and then take advantage of that, as long as, again, the requirements are met for a trade setup. All right, so now we're looking at pound USD, another pair that we obviously look at and that we're following for the entire year. Now, here's another opportunity on pound USD. Again, we're coming off a reset, so I'm still looking for buy setups only. Now, this one for me was more simpler because of the fact of what price action did at the beginning of the London session. So if you look clearly at the beginning of the London session, price moves immediately straight down. So for me, if I'm looking for buy setups, there's only one option for me, and that's simply a type 1. Okay, and so the only thing that I'm worried about if I'm looking at this pair are my type 1 setups. If it doesn't produce a type 1, then there's no trade for me. For me, here's what I noticed. You have the first leg that started right here. Once we started to reject, come back up, and then come back down again and retest. Again, look at all of the wicks at the bottom. This is exactly the type of structure that I'm looking for whenever I'm looking for a type 1 setup. Now, as we get into the second leg of the setup here, this right here, these two candles, gives you a railroad track. After this right here formed, I'm thinking, okay, I'm gonna wait for a pullback, and then on the pullback, I can get into the trade. So when I first got into this setup, very good pullback on this red candle that allowed me to get this entry at the very bottom of this blue candle. Now, I had to put my stop loss below the wicks because this was actually still going on, right? So that's the closest low that I could have used at that particular time. Now, all I was trying to do was basically go up to the 50 EMA. The 50 EMA would have given me a 2-to-1 risk to reward ratio. That's all I cared about. Now, you can see here that I've been in this trade now for 1, 2, 3, 4, 5, 6 candles. Now, for me, if I'm not in any kind of significant profit, okay, after 6 candles, I'm done with the trade. There's something wrong. For me, I took myself out of the trade at essentially break even. Okay, there was no gain, no loss. So not a big deal. All right. But as we're going into the US session, okay, we started to, again, just watch and see what happens. So once we get into the US session, here's what I want you guys to notice. Okay, is we start to go and rush, really aggressive, a big push down below these lows of London. Okay, now if you don't know, this yellow line here that you see is basically yesterday's low. By the fact that we're aggressively pushing, and now we're pushing and now rejecting immediately back up again below yesterday's low, all we're doing is the same behavior. We're just grabbing orders. Now, I want you guys to essentially see what I'm seeing here. Okay, is this right here is your accumulation. Okay, this right here is your manipulation. All right, and then from there we get distribution. What I'm looking at after this, all this is formed, is I'm looking at this candle here. This candle is the one that closes above the 13 EMA, which for me is what I need in order to grab or to get into an order. Also, we essentially go and break above this local high here. So this is the first major point of structure that we break. As we go up, we close above the 13 EMA, which is fine. And then essentially now we're looking for a pullback on the next candle for an entry. So here you can see the entry is on the pullback of the next candle. And again, same scenario, my stop loss goes below that blue candle. And all I'm trying to do is go back up to these highs here. These highs are well over 2-to-1 risk to reward ratio. So anything higher than that is just free. So as you can see here, we went up about 2.7 times ADR on this pair. And this is, to me, this is getting in late, right? Because the ideal scenario to get in would be down here. But again, for my rules of entry, just weren't met until we got this close above the 13 with a pullback. 2 trades, all right, where number one, pound JPY had a loss and was able to see what was happening, get back in, and made it into a winner. So the winner overtook the loss. And then on this one, another example of break even because I got out of the trade. Okay, but then notice what was happening with all of the other confluences. Okay, was able to find an entry that met my requirements. Okay, and then just took a 2-to-1 trade. That's it. Understand that there's going to be times when you have break-even trades. There's going to be times when you have losing trades. All right, but if you can just zoom out and just think about what is happening and why price isn't moving in your direction. And by the way, sometimes you're going to have a loss and it's just, going to be a loss. There's not going to be maybe a second opportunity like I had here with these 2 different pairs. Okay, sometimes it's just going to be a loss and it is what it is, not a big deal. But in these 2 cases, it's very important so you can understand what I'm thinking about when I'm looking at these setups. All right, so guys, I hope this brought you some value in today's video and understanding sometimes when you take losses, it's okay and you can bounce back during the same day or even the next session. If you like this type of content, guys, please like the video, share the content, and we'll see you in the next one.